Welcome to Shareholders of a Better World, brought to you by TBLI Group. At TBLI Group, we have an established reputation as an organization dedicated to building the ecosystem of global sustainability and impact investing. We're doing this through educating, advising, and facilitating transactions in global sustainability and impact business, as well as capital solutions for private companies, family offices, and fund groups. For nearly 25 years, TBLI Group has created a vertically integrated ecosystem of education to action through TBLI conferences and TBLI consulting. More about our company can be found at tbligroup.com. This webinar is brought to you by TBLI Foundation, which hosts educational learning experiences dedicated to a better planet. Through the foundation, we build sustainable communities by sharing the people and the experiences making a difference to so many of our lives around the world. Our weekly podcasts bring impact thought leaders that are doing and not only chatting. Now let me introduce my guest today. Thank you. Good morning, everyone in Amsterdam, and good evening to David. Okay, let me do this. And okay, great. So David, if you can join us, fantastic. So thank you all very much for joining. For those of you who are not familiar, if you have a question or a comment, just type it in the chat area and I will take it. Today, I'm really thrilled because we have one of the really world's expert on actually investing in biodiversity and forest, who's done it over many, many years, David Brand, and has been incredibly financially successful as well as environmentally successful with this. So David, for those that are not familiar with your organization, New Forest, and the work that you've done, because you've done it over a long period of time when it was not that sexy. Just share a little bit of your bio and CV, what New Forest does, and then we can get into a deep dive about the potential for biodiversity and addressing climate. And I'll go on mute.
Okay, well, Robert, great to be here with you, and great to meet the rest of you online. Yeah, I have a bit of an unusual background. I was a forester. I did my forestry degree at the University of Toronto and then worked in forestry in British Columbia. And, I think in a recession in 1982, I lost my job and really there was nothing to do but go back to school. And I ended up almost kind of by accident getting a PhD. But what I studied was ecophysiology, which is how to forest ecosystems function, and then became a scientist for a few years. And I was doing some of the early, carbon budget studies of forest ecosystems in the 1980s, looking at how acid rain affected forest ecosystems, looking at kind of the underlying drivers of productivity of forest systems. And about 1990, the Canadian federal government asked me to come into Ottawa and be the technical support for their negotiating position at the Earth Summit in 92. So that was around the Biodiversity Convention, the Desertification Convention, the Climate Change Convention. Actually, the fourth one was supposed to be a forest convention, but that kind of blew up because of the north-south fraction over, forest conservation. But anyway, I worked on international negotiations. Then I took an intergovernmental exchange to Australia and worked on trying to resolve a lot of conflict among stakeholders over forest issues there. And I think after, I don't know, I probably turned 40 or something, and I just got fed up with all the, endless wrangling and policy negotiations. And I figured if you're ever going to really change the world, you have to change how capital is allocated. And so in the middle of my career, having never taken a business course, I switched to investment management in 2000. And I worked for 5 years in a shop, learned the ropes on forestry investment. And then even crazier, I decided to start my own investment management business in 2005 with $1 million loan. And so we started New Forest. And my aspiration really was to try to think about investment strategies that could deliver solid long-term returns, but with positive impacts on things like climate change mitigation, biodiversity conservation, freshwater regulation, community stability, and so on. And, we've been in business now for 18 years. We started out in Australia and New Zealand. We've expanded into the US, into Southeast Asia, into East Africa. Our clients are some of the, real blue chip institutional investors from Europe, North America, Australia, even Singapore. And, in 18 years, we've never had a year of negative returns. And we've been in the early teens average across everything we've ever invested in. So I think we've always stuck to our principles and have had sustainability-led investments. That doesn't mean we don't cut down trees and manage timber plantations and we have sawmills and so on, but we do it in a way that tries to always be thinking about how we can make a positive contribution. So, I guess that's the background to me, Robert, and maybe turn it back to you.
Congratulations on no losses in those all those years that you've been
well, not in every single asset, but like consolidated
on average. What we've had tens of billions, probably even more, going into all kinds of climate tech funds, and nearly none of the climate tech funds will impact climate in the short term. Dry air capture is like, taking a shot glass to the Pacific Ocean and say you're going to move it one shot glass at a time, where biodiversity works, and it's worked for, thousands of years. Why is it that so much money is going into that compared to relatively little money going into biodiversity?
Well, it's kind of interesting. Like, if you look at the money that's been invested in forestry, for example, it's probably in the order of $100 billion. I think institutional investment in agriculture is even less than that.
Yeah.
But the investable universe is actually quite tiny. The estimates of the investable universe of forestry is probably $400 billion US. And the investable universe of agriculture, well, agriculture is enormous. What's potentially investable is suggested to be maybe in the order of $1 trillion. But, the real estate value of New York is $1.7 trillion. So, what does it say about how we value the planet? But anyway, I think the idea of investing in forests for climate solutions, I think that's had pretty good resonance since, really back at the Kyoto Protocol era in COP3. It's been controversial, but there's been a huge amount of effort around looking at climate mitigation with forests. Biodiversity, it's a different kind of kettle of fish. It's heterogeneous at all scales, and you can't try to trade a monkey for a tiger. And so you get these, sort of highly complex concepts. And I think that's why people have kind of moved away from the biodiversity term to nature. And in some ways, the term nature is a little bit easier to understand, and it's a little bit more comprehensive, because it's not just about the diversity of the species and genes and ecosystems, but it's also about their function, their ecological services. And we can start to think about how that could be investable at a scale. But really, it was only the Montreal COP where this sort of got some traction with investors and with the media in terms of, gee, this is as big an issue almost as climate. And in fact, the two have morphed together now, where climate and biodiversity are almost seen as joined at the hip, and that you can't fix one without the other. So, I think we are kind of at the start of an era where we will start to see a lot of experimentation, a lot of new investment opportunities that are trying to drive this whole sustainability agenda and land use.
Do you think it's, there's been some pushback recently against South Pole and Red Plus and Zimbabwe and kind of fictitious um, stories about organizations not really producing any significant improvement, and that the verification is not accurate. Are we going to get to a point that there will be accepted, validated, regulated biodiversity credits, which will speed up the money going into nature or nature-based solutions?
Yeah. So there's in the carbon side, you've got regulated markets. There's the California AB 32 market, there's the New Zealand market, there's the Australian market. Governments say what the rules are, and the governments monitor the rules. And if you have a project, the government accredits it. And so in some ways, if you've got a problem with it, then, argue with the government, but they set the policy. And in the voluntary market, it's a different world. Here you often have project proponents who are putting forward their projects. They're hiring their own verifiers to verify their work. So it's a bit like who's going to bite the hand that feeds them. And, these are also pretty complex concepts. I mean, what would have happened if you didn't have the carbon project? It's impossible to know. And so I think there have definitely been people who, in good capitalist fashion, have tried to maximize their return. But you also need the regulatory framework that ensures that the rules are followed. So I think there's been, over the last 2 or 3 years, a lot of work. There's an integrity council of the voluntary carbon market. There's, initiatives that are aiming to try and really clean it up. I think even Vera, who's the main standard setter, has gone through and redone all of their standards, which will knock back the crediting probably by 50 or 60% from what it was before. So everything is getting tightened up, and now they have ratings agencies on carbon projects. And so I think slowly but surely it is the Wild West components getting squeezed out. It doesn't mean that we won't see more scandals and so on, but I'm saying that overall the quality of the practice is steadily being improved. On the biodiversity side, interestingly, we've had regulated biodiversity markets in places like the United States for over 20 years. And we've invested in all of these different instruments. Wetland mitigation banks in the US, within the whole country, you have hydrological unit codes. And if anyone has an impact on a wetland, it has to mitigate that either by restoring, enhancing, or conserving other areas within the same hydrological region. And that market works extremely well because it is something where there's a fundamental no net loss law. And so that gives you a very strong foundation for price discovery. And, I'll just give an example. In Indiana, we did the first wetland mitigation bank. And we bought a kind of a soybean field where they drained all of the wetlands and had, tried to make it into soybeans. We bought that for about $7,000 an acre. We were the only wetland mitigation bank. And so we had a kind of a pretty strong market position. And by the end of that bank, we were selling the credits for $100,000 an acre. And what we had done is ripped out all the drainage tiles, reforested it with a mix of natural species, and allowed the kind of natural ecosystem to reemerge. And going from $7,000 an acre for soybean to $100,000 for mitigation, it shows what supply and demand does when it's properly designed. And same thing, you've heard probably the amusing story of the red cockaded woodpecker, where a breeding pair was trading for $250,000, or some sort of coastal sand fly in California that was trading at $7 a square foot for its habitat. Vernal pools, $300,000 an acre. So, biodiversity, when it's structured correctly, you can, and you create scarcity, you can create value. But trying to roll that out globally, isn't going to happen overnight, and it's probably going to have the same sort of controversies that we've seen in the carbon markets. But there's a substantial amount of interest from governments to use these market-based mechanisms. And so one more thing before I stop is, the biggest thing to me that came out of the Montreal Biodiversity COP was that there's now a target of 30% of all ecosystems to be in protected areas. And the recognition that to achieve that, a lot of that biodiversity conservation work and restoration work to meet those targets is going to have to be done on private land. And that creates an opportunity, again, to create these kind of biodiversity banks that can contribute in a regional context to ensuring that we have a scale of protection of all ecosystem types. And that's where I think, there'll be an opportunity for investors.
Yeah, I don't know if you're familiar with Professor Ratan Lal. I don't know if you've ever heard of him. So he's a kind of ultra nerdy soil scientist, very humble, teaches at Ohio State, was a mentor to Al Gore. And in a short clip, he's published a lot. He's on a lot of advisory. And in a short video clip, he was saying that from the research him and his other nerdy professors around the world did, that if you restore the health of the soil and the vegetation, you can draw down 330 gigatons potential of CO2, which translates into, I think, 155 parts per million, which was an incredible number, potential. I know the Earth is big, and then you got the oceans and that. I know that you're focused mainly on forestry. Do you also look at the potential of restoring the health of the soil to kind of pre-industrial stages when it was, 3 or 4% CO2 in the soil?
Yeah, I mean, we've just bought over 100,000 hectares of grain farms in Australia, and we've announced publicly that we've just acquired 3 million hectares of grazing land in the north of Australia. And so I think those are going to be our living laboratories of balancing climate and production systems. And, I think there is an opportunity there.
And do you think that if, the price of biodiversity or nature credits reaches the level that it needs to be, that will create the gold rush for these types of nature-based projects?
Well, I guess the way we look at it, Robert, is in a similar way to how infrastructure works, where Macquarie Bank would buy an airport, and then would layer on all this option value: parking lots, conference center, hotel, airline lounges, Louis Vuitton shops, what have you. Well, think about land. Land is option value. So you've got land, you have agricultural produce, you have timber produce, you have conservation finance, you have carbon markets, you have biodiversity markets, you have water rights, you can have wind farms, solar farms. So you have this ability to just steadily work to develop this option value, create more sustainable systems that have a richer economic base, and are going to be benefiting those communities by being more ecologically and economically stable. So I think that's kind of the recipe for this whole emergence of a natural capital asset class.
So new forests that you started invest not only in forests, they do in wetlands and in grazing area, in many, many different kind of natural habitats. Yeah,
we've become a landscape investor. And our new fund in Australia is called a landscape investment fund. So that means we can look at forestry, agriculture, conservation, and we can do the analytical work to be a lot more granular about how that land is allocated. And you start to see revegetation of riparian zones. You start to see agricultural areas where there's less productive or less profitable parts of a farm that otherwise people just farmed it wall to wall. But when you start getting more granular and there's a carbon price signal, you might start to reforest some of the less valuable farmland. Or in the case of forestry, there might be areas that should be brought into, cropping. And you start to see land kind of move into a much more optimal allocation that can deliver both conservation and production in balance. And that's why we kind of think about it as a landscape investment strategy.
And if we just look at forests now, okay, the forest investment that you do, when you send the prospectus, do you only talk of the value of the wood, or do you also discuss what the potential bio credits or reforestation credits that could accrue in the future?
So we do have, like, the narrative in our investment memorandum will be around having a core return, which comes from conventional forestry or agriculture markets, and then looking at some of these sources of improved returns. And as an example, our US investment strategy, the way we work is we've built a proprietary geospatial model. And that model is designed to identify areas where there's unrealized climate mitigation potential. And we buy that on a discounted cash flow valuation of the forestry cash flows, then re-optimize the use of that forest between the carbon market in California and the timber market. And we had 200 to 400 basis points of excess return by doing that.
And these are considered voluntary emission rights?
No, these are regulated carbon markets in California.
Okay, but does the forest have to be in California?
So you have, this gets, you're driving me down the rabbit hole here, Robert, but you have DEBs and non-DEBs. So DEBs is direct environmental benefits to California, and non-DEBs is, it's US-based projects that don't have direct environmental benefits to California. And the DEBs in California have a higher price. So they're maybe like $30 a ton versus, say, 20 for the non-DEBs. So there's a restriction on the emitters that they have to have a proportion of their offsets that they buy have to be from the DEBs type credits.
Okay. And the issue of measurement, there's been a lot of development about drone analysis, laser, all kinds of mapping of, is there more CO2 being sequestered in the soil, and trying to verify that and then securitize it. So that's a whole other world. What have you found as the best way of proving the sequestering of CO2 in the projects you do?
Yeah. Okay, well, now we have to talk about carbon markets and carbon accounting. These are two separate things. Carbon markets are rules set by the governments that if you do certain things, you get awarded offsets or credits that you can sell into the market. Carbon accounting is based on, holistic accounting of what the carbon stock in your forest and forest soils is and what the stock change is. And so if you're an institutional investor and you've made a commitment to align your portfolio with the Paris Agreement, you want to know what your emissions are and what your removals are.
Yeah.
And that's an accounting problem. And so in our case now, our clients get a P&L, they get a balance sheet, and then they get a carbon account. And that tells them, what their position is on their forestry investments, and they can use that as part of their overall portfolio level accounting. I think where we'll end up is in a whole natural capital accounting framework where we'll have carbon, biodiversity, and water. And the investors will then be able to make a nature positive commitment. They'll be able to make a Paris aligned commitment. They'll be able to make kind of a freshwater regulation commitment. And we can serve that data up. The critical thing is trying to get everybody standardized so that they don't get a dog's breakfast of different accounting methodologies. And that's, we've recently actually formed an international sustainable forestry council that is working to bring all the major forestry investors and forestry managers together and say, let's agree on this and get it straightened out so that we can all start to move into this new natural capital asset class with a consistent basis to it. And this is put the plumbing together so that it serves our clients who are the ultimate asset owners.
And has this new standard been accepted by the large nature investors or forest investors?
Yeah, no, we're not. I guess our view, Robert, is we're not going to be the ones to set the standard. What we want to do is just bring scientifically credible, discussion into the process so that we get an outcome that's workable. And at the moment, we're working on you have the scope 1, scope 2, scope 3 carbon accounting system, and now they're doing a land use and removals guidance, which has been going on for about 4 years, frankly. It's like pulling teeth. But I think then there'll be fora where we can look at what the standardization of biodiversity metrics is and so on. And the idea is we can participate in that and be a kind of a voice of, here's what we can deliver and here's what might be difficult to deliver. And, there's a lot of practical scientific and management capacity in all these forestry businesses that we can bring to bear and try to get a workable outcome. I'm sure it'll be, a matter of years before this is all really bedded down.
With the different strategies that you have of wetlands and farm and forest, are each of those different funds, or is it?
Yeah.
Oh.
So the way we operate is we have geographic funds. And so we have a US vehicle, we have an Australia, New Zealand vehicle, we have a Southeast Asia vehicle, which is blended finance. And then we have an African vehicle, which is what we call a platform. And all of these are structured so that we can integrate the core production systems with enhanced biodiversity conservation and climate mitigation. So you take the fund we have in Asia, it has a Class A and a Class B. The Class B component, which is about $50 million, half of the money in the Class B has to go into a menu of biodiversity enhancement, climate mitigation, or community development activities that don't generate a return. And so those investors take a lower part of the waterfall, and everybody gets a 2% preferred return. But then the commercial guys, they get a 10% preferred return. There's pari passu above that. So it's quite a clever way to, sort the stack. But it also then allows for, high impact investors to go into the fund, and they still get some return, but they supercharge the whole, sustainability side of the fund. And our African vehicle, we call it a platform because you can have different types of capital all connected and managed, but the core is the forestry, where there's conventional forestry returns. Then you might have a side fund that's doing high impact carbon deals. You can have a community agroforestry package that goes alongside it, but it's managed all across by the same team, and all of the financials are flowed up to the respective sources of capital.
And so and I guess, as you were mentioning, different return on investment from different participants.
Yeah, and some participants, like development finance organizations, may require no return at all. So what they might be wanting to do is really focus on agroforestry or restoring degraded land. But that then doesn't kind of pollute the return of the core commercial investor who needs to deliver a risk-adjusted return to pay people's pensions or manage the insurance pool risk or whatever.
There's a question here from David Smith. He's asking, does asset/investment size matter, or are more optimal allocations, biodiversity, carbon, etc., a higher driver in your investment mandate?
It varies. So like our US strategy is focused on generating excess returns from the carbon upside. And there the carbon will be sort of 20 to 40% of the return. You go to a place like Australia, a lot of the assets are probably 90% timber return or agriculture return still. That may evolve over time, but that's kind of where it is now. New Zealand's an odd situation because the carbon price went to 95 New Zealand dollars a ton, which is about 50 US because the Kiwi dollar is about 60 cents. But it's almost like doing an experiment, like what would happen to New Zealand if you put a $50 carbon price on land? Well, the first thing that happened was that land prices went up. So the price of the carbon got capitalized into the land value. And it may be the same with biodiversity. In fact, that's what we want, right? Is we want the asset value to go up because it has high quality biodiversity. But it's just really interesting to see how this is evolving. And what a lot of people are saying now, in fact, I was just reading a report yesterday that was sort of saying that there's a lot of people now feeling just get a hold of the land and then ride these option values as they emerge. And there's a pretty strong narrative there that carbon prices, biodiversity prices, value of fresh water is all going to go up because we have one planet, and the population keeps rising. The economic pressure on that system keeps rising. So if you wanted to go long on nature, that's probably not a bad strategy, especially when in the interim, you've got relatively understandable cash flows from markets like agriculture and forestry.
And your funds are 10-year funds or evergreen funds?
Yeah, it's again a bit variable. Most of our funds are 10 to 12 years. And then the investors have the option to extend them if they want. Like our first fund in Australia, I think the view was when you acquire high quality assets that have perpetual cash flows, why would you sell them? Yeah. And so we converted that into a permanent open-ended hold. Our African fund is an open-ended vehicle right from the start because the view is that it's a consolidation play that will just keep building and building. But some of the other funds are, I think our US fund is going to be open-ended, but it'll have 6-year liquidity windows. Our Asian fund is a fixed term. So it's a little bit depends on the nature of the assets you're investing in and the, what we think is attractive to the market.
What is the range of return on investment from, farmland, wetlands, forest? Is it going like 2 to 10%, something like that?
So with conventional forestry, there's a bit of art and a bit of science, but the general view is that the deepest, most liquid market for forestry assets is the US South. And the general view is that the risk premia for that deep liquid market is about 500 basis points over the US risk-free rate, say a 10-year treasury bill.
Okay.
Then you go to the US West, it's maybe another 50 basis points, so 550. Go down to Australia, New Zealand, which is probably the second most popular forestry investment destination. You're looking at, sort of 650, 700 basis points. There's a little bit of difference depending on how much cash yield. Are you export exposed or domestic exposed? And so there's, things that affect what you actually choose as a discount rate. Agriculture, sort of harder kind of a business because a lot of the agriculture is coming from the capital appreciation of the land. And so that's a bit of a mug's game. But what people sort of suggest is that there'll be an underlying, historically, there's been an underlying capital appreciation of land values by about 5% per annum. And then there's an income component, which is sort of 4 or 5% per annum. So you get about a 9% nominal return. Some places it's been higher than that. But, you have to believe in land price appreciation. And then when you start to look at It's really interesting because we have these investment committee debates, like what should be the discount rate applied to carbon cash flows versus timber cash flows.
Right. Yeah.
And we had sort of landed that if, the forestry discount rate was maybe 6, and I'm saying 6 real here, net of inflation.
Oh,
So 6 real could be 9 nominal.
sure.
Then the carbon might be another 300 basis points higher because it's more volatile. It's more
Yeah.
subject to political intervention.
Mhm.
And so you have to put a higher risk premium on that rather than a natural market, I guess you could say.
And the uh who who are your investors? You don't have to tell me their name, but I mean, are they mainly institutional pension funds or are they
Yeah,
retail customers or family offices?
it would be 60 to 70% defined benefit pension plans.
Oh, wow.
And then 15% might be insurance and reinsurance companies. And we have Aussie super funds. We have one sovereign wealth fund. We have development finance institutions in Asia and Africa. And we do have some family offices, but it really, the bulk of the money is coming out of those big pension funds that are, trying to write $100 million checks.
So there's no retail investor or capability for retail investors to invest.
No, we've been all in basically private market stuff.
Okay. Mark wanted to know, is there a reason you aren't invested in Europe, or maybe you are and we just haven't mentioned that?
Well, you're watching a work in progress because I started the company with Australia and New Zealand. Then I expanded into the US after about 3 or 4 years. Then I expanded into Asia after 2 or 3 years. And last year we expanded into Africa. So, then we might do Latin America next. I don't know. But I sort of feel like I've always said to people in the company, let's build it brick by brick. Let's not just try and like wave a magic wand and have a house. And I think that's the best way to build a business is you add a new geography, wait till you've got that bedded down and it's profitable, then you can look at the next one. And through doing that, we've had a company that, has thrived through, the global financial crisis. We had a 4% return, in the
Oh,
COVID. Well, of course, in COVID, the story was that lumber was more valuable than Bitcoin, but it's been an interesting ride, but we've been steady growers, but not getting, ahead of ourselves.
I wanted to ask your advice. A friend of mine, he's the largest organic rice producer in Southeast Asia. And he was so frustrated by all the rice field burnings. And I looked at the air quality index of the world, and like Chiang Mai and Chiang Rai were really bad, but there's no industry there. It's all from rice field burning. So he created the idea of I'll take away the biomass, give the farmers the rice, and I'll convert that to a replacement for single-use plastic, which was plastic containers to take away. There's 50 million use per day. Does a project like that, which he's launching now with money from GTZ, does a project like that, would they ever be able to qualify for any types of biodiversity or nature credits?
Well, it's a matter of getting the methodology right so there's
Oh,
confidence in it. There's been talk in California, for example, that going in and trying to reduce fire hazard and fire flammability or whatever could generate carbon credits. And, you'd need put in place fire breaks, probably thinning of the forest, improved detection and initial attack capability. And if you could quantify that, then potentially there'd be crediting available. I think what's interesting with what you're saying about using the rice straw for
yeah.
bioplastics and so on is this is another big thing that's happening is this transition to a circular bioeconomy. And there's going to be a huge amount of demand for biomass because we make 300 million tons of industrial plastics each year. Interestingly, we also make about 300 million tons of wood pulp each year.
Wow.
But you could potentially substitute for plastic from using biomass. And, plastics, it's only 10% recycled. So you have 270 million tons of plastic waste that's often spending 500 years in the environment without decomposing versus having paper-based materials that decomposes within, months or a couple of years. And, so what we're seeing is this movement now that anything made from fossil fuels can be made out of a tree.
Right.
And, we're selling wood fiber into the market to make Tencel, which is a fabric from wood fiber that substitutes for polyester. We're seeing paper straws instead of plastic straws. We're seeing even those horrible wood knives and forks in a McDonald's store. I hate using them, but they're made of wood, so I have to like them. Yeah. But bioplastics, mass timber construction that replaces concrete and steel, biochar as a soil fertility amendment that means you need less nitrogen fertilizer, which comes from natural gas. Just everything you can see movement to substitute. And so I think there's going to be a real opportunity, instead of, as you say, burning that material, to actually make use of it.
I wanted to get your. Do you also invest in bamboo forests?
We haven't yet, but I mean, there's nothing to stop us from doing bamboo in Asia, because it is an incredibly productive system. You look at a typical forest in Australia might grow 20, 25 tons of biomass per hectare per year. Bamboo can grow 100. And
wow.
So it's very efficient converter of sunlight, moisture, and nutrients into biomass. And so when you start to look at things like building materials, like the socks I'm wearing right now are made from bamboo. So, it's a fibrous plant that can be used in a lot of these, both construction and fabrics and other sort of product developments.
There's a Swedish company that I was introduced to recently that builds these mega wind turbines from wood. So not the propeller, the turbine itself, and he was explaining one of the reasons is because they can make it into smaller pieces to go for so the logistic and the transport. And I mean, they were huge, like 150 meters that they're talking about. Yeah. And laminating the wood. Then you hear of skyscrapers made from wood. Do you see that also as a significant growth area as people start to shift more to natural fibers?
Yeah, I think again, when you look at wind farms and you've got huge concrete and steel components to those wind farms, how many years of wind farm do you need to just offset the emissions associated with the materials? And
right, yeah.
So if we can bring sustainable, renewable materials into those systems, you're going to improve the amount of emission reductions from those wind farms. And we're also finding out with those giant wind turbines, it used to be that they'd complain, oh, we can't put the wind farm in your forest because there's surface roughness. And now they just say you're irrelevant now, so high up that the wind farm, has no, the forest has no effect anymore on the wind farm. So that makes us very attractive, because a lot of people don't like wind farms in their backyard. So when we have a 50,000 hectare forest and we put 100 wind turbines in that, nobody even knows. And, it allows us again to create that option value. And, particularly looking at Australia at the moment, we're the largest landowner in Tasmania down in the south. And that's right in the roaring 40s. And, so there's lots of wind there that we can use. And Tasmania is 100% renewable energy. So it'll be exporting renewable energy to the mainland. And it's the same thing. I mean, Australia now, as you're probably aware, they're trying to build an undersea cable where they'll make solar power in Australia and ship it to Singapore under the sea. And I think there's one coming from Morocco to the UK as well.
You've built a very substantial asset manager in nature-based solutions, from forest to wetlands to agriculture, and you're still stepping on the gas. You're not stepping on the brake. So where do you want to be with New Forests in 5 years?
Yeah, okay. So one important thing to disclose here is that last year we brought on board Mitsui and Nomura as new strategic shareholders in the company. And Nomura, as you know, has something like $1.6 trillion in assets under management and has an enormous distribution capacity. So we've been growing at 20 or 25% per annum for the last 10 or 15 years. And we're now at, I think, 7.5 billion US in assets under management. But to keep growing at that level, we need more horsepower in the distribution side.
Sure. Yeah.
So that's what they'll bring to us. And then, to me, what we'd like to do is, try and get up to 25, 30 billion in AUM by, say, 2030. And that's where starting to look at things like, we bought 3 million hectares of Northern Australia. That's a big investment with all kinds of option value. There's a lot of other places in the world where those kind of large-scale natural capital opportunities can be developed. So that's what we need to be thinking about, is how do we scale this and continue to geographically expand, as well, as one of your listeners asked earlier.
And you don't do anything in ocean industries?
No, so far we're pretty much land-based, although we would do things like mangroves and that type of stuff. But who knows? I guess for us, we did the first California AB 32 carbon transaction with the Yurok tribe. We did the first Australian ACCU trade. We did the first fund that did wetland and biodiversity banking. So, we've kept pushing into these areas where we see emerging opportunities, and it may be in future. I've stepped down as CEO. I'm now the executive chairman, but people might say, let's look at a whole ecosystem fund or something that can work across both aquatic and terrestrial systems. I'm not predicting that. I'm just saying, where does the opportunity lie, and where do people want to deploy capital? That's our job.
And when you started New Forest, it was probably a harder sell than it is now. Probably that's why Nomura, wanted to buy a stake in your company. Maybe they see, hey, we could do retail distribution for this. Who knows? So at that time, I was probably more about why the questions, and now it's more about how. So what advice would you give to investors who are looking specifically at this particular space? You keep reading about Bill Gates being the largest landowner in the U.S. and things like that. What is your advice? Because you're not needing to convince them anymore about investing. But what kind of advice you say if you're looking to get into this space?
Yeah. Well, the first thing I do is I ask people a few questions about what their investment objectives are.
Right.
And, if you're a really high impact investor and you're prepared to take higher risk to generate more impact, then you might want to look at emerging markets and the tropics, because that's in a sense, that's the core of the climate and biodiversity solutions, is finding ways that we can bring capital into the tropical rainforests and those type of incredibly valuable ecosystems that are still under relentless pressure. If you're an institutional investor, really focused on liability matching, but also wanting to be exposed to some upside opportunities, and you look at the sort of US, Australia, New Zealand, have your core underlying forestry asset and foray out into the carbon and biodiversity markets. but you've got a protected downside. And so that's kind of the way we've structured those funds. And that's why they've attracted institutional investors. You can have your cake and eat it, if you will. But, and then there's people who want to go direct, and they may want to do particular investment strategies linked with, both agriculture and forestry, or so in some ways, I try to listen to what people are trying to achieve, and then think about how we can help them meet those objectives.
We're coming. We have. I promise you to keep it to 60 minutes, so we have 10 minutes left. How can the audience that is watching now live, and most who will watch the replay, how can they help you?
Well, I think for people who have an aspiration to getting involved in these impacts, then we want to scale these funds up. So we'd be more than happy to, have conversations about whether some of our funds would be attractive to your listeners, or whether there's a particular, we do club deals. So, we're always keen to find people that can come in with a co-invest on a big deal. So yeah, we'd be more than happy to see if some of your members and listeners could help support the growth of our business by participating in some of these funds.
I have a question from Ross Feldmeyer. Hi, Ron. This is very interesting. Thank you. Sorry to have missed it. Would it be possible? Okay. Yes, it'll be. Everyone will get a copy of the recording. I thought it was a question specifically. Would it be possible? See, I am also wondering whether you touched upon the issue of local ownership versus foreign investor ownership. Doesn't this deliver issues? I don't know if you can comment on that particular question, David.
Yeah. Well, the first thing I always say to our clients is that international investment is not a right, it's a privilege. And you have to earn that right by delivering benefits. And I'll tell you a little story about Tasmania and why international investment is so important for many rural economies. We bought this asset from a company that was called Guns that went bankrupt. They were paying their service providers on 90-day terms. They were using, their contractors as a bank, and nobody was bankable. No one would extend credit to these guys. Everybody had broken down machinery. We came in. The first thing I said is everybody gets paid on time forever, and everybody got paid. And lo and behold, within a couple of years, everybody was bankable. Everybody could get credit. We then said, if you invest in new, high-quality Swedish harvesting machinery, we'll give you a 5-year contract. And so then they've got security. And then their kids wanted to enter the family business, whereas before they'd said, the hell with that. I don't want to work in that business. And then the community starts to stabilize. And you have kids in the schools again. And so institutional investment done right is incredibly important. And, I think for all of us, we just have to do the job right and we'll be welcome. But in other cases where people have not done the right thing, then you legitimately get pushback and it becomes political very quickly.
As I said, this is being taped, so we will send to everyone who registered and has access to all of our masterclasses, like all the TBLI Circle members. And if you want me to include anything other than just your website to that executive summary or anything like that, or your deck, just please send me that, and we'll send that out, because we'll send this out later today. It's available usually about a half an hour after it's finished. David, you're a star. I remember when you first spoke at TBLI many years ago. We had been doing TBLI for now 25 years, 40 times. So I really appreciate this, and I'm very impressed with the progress that you made from 2005 until now. And now it's nice to be the flavor of the month.
Yeah, the world's finally caught up with us.
Yeah. So if there's anything that we can do to help you, please don't hesitate. And if you want me to include anything when I send out the link for the replay, just send that to me, and I'll wait for that before I send this out.
Yeah, no, I'd have to clear that
Yeah,
with the
sure,
government.
sure.
And
Or
now
just the
we're,
website. The website's
yeah,
okay. Uh,
yeah,
that's fine. And please stop in Amsterdam, or stop into our office if you're passing through. And I'll come back to you about that family office event. Thank you so much for your time,
okay,
David, and
yeah,
all of your brilliant success and herding all of the big institutional investors in the direction of biodiversity. Thank you.
yeah. Thanks, Robert. It's been a pleasure. All the
Thank you all
best.
for coming. Stay well. Bye-bye. Okay.